Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is the 7th of July. Let's dive into the week's top market news. European markets see mixed fortunes as inflation nears target. Last week, the Pan-European Stocks Europe 600 index remained largely unchanged in local currency terms, with major stock indexes showing varied performance. France's CAC 40 index saw a gain of 0.82%, while Germany's DAX declined by 0.41%. Italy's FTSE MIB advanced 0.51%, and the UK's FTSE 100 index edged up 0.28%. The Eurozone's annual headline inflation reached the European Central Bank's ECB 2.0% target in June, a slight increase from 1.9% in May, which had been an 8-month low. Core inflation, which excludes volatile food and energy prices, remained at 2.3%. However, the year-over-year increase in services costs, a closely watched metric by policymakers, rose to 3.3% from 3.2%. Concurrently, the euro area's labor market remained robust, with the seasonally adjusted jobless rate climbing slightly to 6.3% in May from a record low of 6.2% in April, still below the 6.4% recorded in May of the previous year. ECB President Christine Lagarde commented on the inflation figures at the central bank's annual forum in Sintra, Portugal, acknowledging that the ECB's target had been met. This statement tempered expectations for further interest rate cuts this year. She emphasized the need for continued vigilance, stating, "It will take time for us to gather sufficient data to be certain that the risks of above-target inflation have passed," and added, "Our work is not done, and we need to remain vigilant." In the UK, the nationwide house price index saw a 0.8% decrease in June, contrasting with a 0.4% rise in the previous month. Annually, home prices were up 2.1%. Nationwide anticipates a rise in prices over the summer, a period typically characterized by strong housing demand. Separately, data from the Bank of England (BoE) indicated a recovering mortgage market following a temporary slowdown after a tax break ended in April. Net mortgage approvals for home purchases, a key indicator of future borrowing, increased to 63,032 in May from an upwardly revised 60,656 in April, surpassing economists' forecast of 59,750 in a Reuters poll. Now our insight into alternative markets. Decoding Evergreen funds. A closer look at performance and potential. As first-time investors increasingly turn to evergreen fund structures to enter private markets, understanding the true value and performance of these investments is more important than ever. Unlike traditional private equity or real estate drawdown vehicles, evergreen funds feature continuous fundraising, simplified allocation management, straightforward tax reporting, and periodic liquidity. These characteristics have sparked significant interest from wealth channel investors, providing a boost to asset managers at a time when institutional fundraising faces challenges. However, the unique structure of evergreen funds demands a closer look at their risk and return profiles compared to other investment options. Many funds use public market indexes as benchmarks to gauge whether they deliver compelling returns relative to more liquid, publicly traded alternatives. Yet, the asset mixes and portfolio construction of private market-focused evergreen funds differ significantly from public assets, making direct comparisons tricky. Standard private market indexes offer a better fit for assessing underlying holdings, but creating like-for-like return comparisons remains complex. To address this, peer group-based index products that compare evergreen funds by strategy, structure, and portfolio characteristics provide a more relevant framework for performance evaluation. Recent research has developed preliminary evergreen fund indexes across private credit, real estate, infrastructure, and private equity strategies, drawing on return data from roughly $100 billion in assets under management within the Morningstar Direct platform. These benchmarks shed light on how individual funds stack up against peers and what investors can expect from these structures overall. Over the 5 years ending April 2025, private credit strategies have shown robust performance, with the credit index achieving a 9.3% annualized return, surpassing high-yield bonds and leveraged loans. Real estate, however, lagged behind publicly traded counterparts, posting just a 4% return. The secondaries index, comprising a mix of private equity, venture capital, and multi-asset funds that tap into the market for private fund stakes, led with an 11% return. Some of these gains, though, stem from funds buying assets at discounts to net asset value and marking them up, a practice that may not hold up over time. While evergreen funds often highlight their potential to capture the illiquidity premium associated with private markets, results have been inconsistent given their relatively short track record. Even over shorter periods, returns vary widely. About 5% of private market-focused interval and tender offer funds with at least 1 year of returns have posted negative performance since inception, with real estate strategies facing particular challenges. Private equity and venture capital-focused evergreen funds are growing, but their reliance on exits and lower cash generation raises questions about their suitability for semi-liquid structures. Portfolio construction, asset mix, and strategy focus heavily influence outcomes. In private credit, for example, strategies span asset-backed finance, direct lending, bank loans, and collateralized loan obligations, with 1-year returns through April 2025 ranging from 3% at the low end to 11.5% at the top. For many investors, evergreen funds serve as an entry point into private markets, and with trillions expected to flow from the wealth channel in the coming decade, the demand for standardized, relevant performance benchmarks is critical. Ongoing efforts aim to expand the dataset of evergreen funds to help investors discover and evaluate these offerings more effectively. As the landscape evolves, these developments will provide greater clarity for navigating the opportunities and risks of evergreen funds.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.